Hello there, traders. This is Chris Keene from a Keen Point of View, and this is the Wake Up Call. As you can see, that most of the majors continued to move up through a significant support and resistance zones last night, as most traders are baking in the cards that the FOMC and Ben Bernanke during the rate decision and press conference today may announce some additional form of quantitative easing. Where right now, Operation Twist, which with $45 billion of short-term bonds to purchase for long-term bonds every month, is set to expire at the end of the year. What they're expecting is some plan similar with $45 billion, but it's not going to be sterilized, and it's going to increase the balance sheet, increase the Fed's balance sheet, and this would be have a negative effect on the dollar. But if going into the FOMC today, we do not get that result, which is very much possible. I would expect actually almost a wait and see kind of approach where we would just kind of continue something similar to Operation Twist to make it balance sheet neutral heading before the end of the year, and with the physical cliff issues heading in the horizon. But if we do get anything like that, we could see a quick reversal in the dollar. So basically tonight we're going to have to watch, or today we're going to have to watch the FOMC to get an idea of what could happen here. Anyways, let's take a look at what's going on. As you can see, that most of the majors have pushed up overnight, and the Euro USD is still sitting right here in this resistance zone. It's trying to break the top of the zone, but let's just say it's the resistance zone between 130 and 130.20. 130.20. The pair is just sitting briefly a few pips over the top of that. We get a clear break of this after FOMC. We would probably most likely break above this resistance zone here at 130, but we could see a push all the way up towards the 130-180 level. That would be the next major level of resistance. But if we do at the meeting get a less dovish, we don't make a run where we continue. The FOMC decides to continue maybe with a wait and see or not to increase the balance sheet. We could easily see a push back down for the pair, and we could see a beginning of a run. I would say all the way back towards the 50 fib at 126.15, but the initial target would be a move back down towards the 128.85 level. Similar to the Great Britain USD, you can see the pair has broken above the significant resistance level right here at 161.30, which had capped the price action recently, but we still has more resistance right here at 161.80. If we get the outcome where we break above 161.80, we could easily move up to 162.75, and we'll be watching for that. But if we break back below this level here, say around 160.90, we could be looking for a move towards 160, and then ultimately further down we target a move towards the 159.60 level, and this would all based on the FOMC also. The Aussie, you can see, has broken above that descending trend line that we spoke about. I wouldn't chase any trades at these levels. It's just anticipation, but it didn't go on a wild run. It stopped right where expected at 105.50. We'll have to watch these moves depending on FOMC. If we get a move above 105.50, we could easily have a move higher, much higher in the cards, and break a 106.30 targets 108.50. But if we break back below this trend line and we have a less aggressive nature, but you have to keep Aussies a little bit different because they have just announced that they are going to most likely be ending their easing cycle. But we could see a pushback down towards the 103 level. New Zealand keeps going up. It has been showing no mercy. Resistance is at 83.50 and support's down at 83. Just the same as the others, it's going to depend on the interest rate expectations. As you can see, a move above this 83.50 level opens the pair up for a run towards 85.60, followed by the 87 region, and it seems to be on fire right now, but it looks like the move could be running out of steam in the short term. But it could receive new fuel today with the FOMC. But if we do break, I would just be watching for a break of either side of this, 83.50 or 83. Break back below 83, we could be in push back down towards 82. Above, like I said, the targets I just mentioned. The CAD still struggling to find ground below this 898.70 level. You'd have to definitely wait for FOMC here. I would expect it just seems to be consolidating right here, just a little bit below. If we do though have a firm move below this, or this real confirmation of this break, we could see a move back down towards the 97.60, 97.35 level. If not, we could break right back up to 99.50, even up to parity. The yen, surprise move of the night. I guess total it broke above the top of the wedge. Now it looks like we have next level resistance at 83.20. That would be the level to watch. A break of that could expose 84. And then for a much higher move. But I wouldn't touch this pair before FOMC. And if we do break back below the wedge, I would definitely 100% expect a test of the 81.70 level in the short term. Let's see if we have any exciting moves in most of the Aussie JPY still consolidating. I do know in the Great Britain JPY we're right up at this range at 133.70. So once again, this will be interesting. If we do get a bounce lower here, we could see a relatively aggressive move all the way down to the 129.60 level. This is definitely a pair I'm going to have on my radar. And similar, the Euro JPY is sitting right here at the highs of the range once again at 108. And it looks as though the pair wants to go higher, so I would watch for a break of this level, and we could move up to 110, but if we do fall back, we could definitely test the bottom of the range at 105. New Zealand JPY, same thing, we've talked about this many times, is sitting right here, right now, at the very top of the support zone at 169.70. A break of this opens the pair up for a move much higher, so we'll have to watch this. So the yen pairs are definitely of interest, and they will exaggerate any move higher because the yen will depreciate also against the U.S. dollar. Well, U.S. dollar, and we would also have euro strength. So we could any move would be exaggerated in the yen pair. So we'll have to watch that for maybe picking up a couple pips after the FOMC in either direction. All right, everybody. Good luck trading. Keep your eyes open to the Twitter feed. I'll probably stay neutral until after the FOMC because I don't want to jump in front of a speeding train. All right, everybody. Good luck.